Good afternoon, traders. Good morning to some of you. It's a wonderful afternoon in Moscow. The sun is still pretty bright. So, and it's a wonderful day. I hope all you guys are having fun and enjoying your holiday, those who are celebrating it. So, today, what I'll do is I'll just give you a very short rundown of some of the charts. Basically, mostly in time frame that are tradable or, longer term charts that we can see. And at the end of it, I'll leave time for questions. But before we do all of that, I want to spend a couple minutes first to promote the TradingView charts because I think they're worth it. So I was just promoting before we started the webinar to those who were in, to those who just joined us. Please subscribe to the chart. If you will be looking at this webinar and you are from TradingView, you're not from TradingView, please sign up and subscribe for their chart. It's really worth it. I'm with them for 1 year. Saturday gone was 1 year of my time there, and I can tell you it's an amazing place to be. You get a lot of help from traders. You get a lot of support from traders. It's a wonderful community, and the charts themselves are really, really great. They are worth much more than the money they're charging for it. So if you can afford it, and I'm pretty sure if you're a trader, you can afford that, right? You can afford a 1 year subscription. Please subscribe. If I can work out with them how to get you back that 30% reduction that they give for referral, you can say I referred you through this webinar. If they need the link, I'll try to get the link. It's not working right now. I'll get it to give it to you so that you can get. And I don't know. They don't have a system set up to give you that automatical reduction, the referral charge that they would give me, right? I really don't need it. I don't need the referral money they're giving me. I told them that when they asked me to do it, and I said, I would appreciate if you give that back to the traders so that they can subscribe. So let's make this entire week that we're doing the free webinars, a week of subscription. If you haven't, try subscribe, at least for a 1 year. It's not expensive. It's really worth it. Right? Let's support them. It's a week of support for TradingView. Spread the news, invite friends to the platform. Let them check out the charts. Let them check out the community. We have a wonderful community there. A lot of good traders, excellent traders there, sharing their ideas, sharing their strategies. So you have a choice. You have a really huge choice to make. There are many different systems you can follow there, and it's what works for you. Anything that works for you, as long as it's helping you to make profit, go ahead. The community is an open community, and it's really wonderful. Right? So today, I wanted to show normally what we would do in our webinar, daily webinars. I'll open the charts. I'll go through all the charts, show my traders trades for the day. They will use the strategy we have to trade, right? Okay, 1 second. Some people are still getting problem to sign up. Okay, Victor, thank you for helping there. So I hope everybody is getting connected now. Yep. So you have a huge choice of strategies to choose from there. So please sign up. Now let's start. Let me tell you, for those of you who are absolutely new to my webinar, coming here the first time, and I'm pretty sure will be some people who are pretty new first time. Let me give you a very short introduction as to what we do in our trading room. Right? It's very simple. I typed that my trading room is free, and it is free. But what happens for you to get access to the trading room? You actually have to understand how and what we trade, right? How we trade, the strategy we use. And that is why you need to take the subscription. You need to take the training course. I'm not promoting that here now. I'm just telling you what. But so this is what we do in our trading. Basic. We do wave analysis. So very short, what is wave analysis? And why I use wave analysis. Let me give you a very short reason why I use wave analysis and nothing else. Absolutely nothing else. Right? Not that everything else doesn't work. Right? You can do anything. You can flip a coin and you're going to get lucky. You're going to win some trades. You're going to lose some trades. Right? And I'm absolutely serious about this. You can flip a coin and you will win some trades and you will lose some trades. If you're lucky, you win more than you lose. But that is not a good strategy in terms of analyzing the chart. That doesn't help you analyze the chart. It helps you trade. Right? You can use any strategy you want. You can draw a horizontal line and trade. It breaks the line, you buy. It doesn't, and you can draw the line anywhere. It really doesn't matter. It breaks the line up, you buy. It breaks the line down, you sell. the chances are you could be successful, right? And that's chance. That's not analysis. What I do is I need something to help me analyze the chart. That's what I do. I analyze the chart and then I make forecasts as to where I think this chart is going to go. What is the further development of this? That is what we do when we do wave analysis. We try to say what wave structures we have in this chart, right? And where it is going to go. Now, what is the whole idea of wave analysis? Why does it work? It's very simple. Everything in nature moves in waves. Whether you like it or not, it's a fact. Sound move in waves, light move in waves. The ocean, the ocean creates waves when the water is moving up and down. When you have high tide, low tide, it doesn't go in a flat thing, right? It moves in waves. So nature is like that. Nothing moves in a straight line. That means if you study these waves, and people study waves to understand, that is how we know that we have, ultrasonic, the different level of sound that you can use because of the different frequency they're having in their waves, wave frequency, right? So it's the same thing in trading. If you study the charts, you can see waves. You see different level of waves, different degrees of waves, as Elliot called them, right? And if you understand how to read the wave structure, it gives you very high probability how to forecast where the next move is going to go. And it's simple. I'm going to show you how simple that is. You look for an impulse. I'm sure 100 out of the 119 people in the room have seen this before. You look for a correction and you buy the next impulse. This is how simple it is. I will show you this on the chart as well. Here is where the problem comes. Understanding this part. This is your problem. Understanding the correction. Not buying the impulse or understanding the impulse. You don't have to understand the impulse. It moves pretty fast. Your problem is understanding this. And there are two things you have your problem with in understanding this. One is your time factor. That is this axis. Understanding how long it's going to correct. And the second thing is what type of patterns it makes. How to know that it's complete. That there is a complete pattern on this structure. That's all. If you can tell that there is a complete pattern in this structure that you know, that you recognize, that you understand, and that you've seen hundreds of times, thousands of times repeat itself, then you know that that structure is complete. If you know how long this structure should take before the next impulse goes, you're great. You're wonderful. You just hit. That's it. Bingo, you got it. And that is what I teach my traders to do. Now, you can spend, like me, 2 years, 10 hours a day, 12 hours a day learning how to do that. Or you can take my course and you can learn to do that in 6 weeks, which is very compact. And then you train for the next couple of months and you master it. It's that easy. I teach you these patterns, what they are, what type exists, how to identify them, and I teach you the time factor, how to know that it's complete. And then that is the analysis part. And then you find a strategy to trade it. And here is where traders start freaking out on TradingView. Can you please tell us how you trade the breakout? No, I cannot tell you how I trade the breakout. I cannot also tell you how I trade the fibs and which fibs we trade. Because those are strategies I promise only to my traders who took the trading course. Now they paid for that. So I think I owe them that much not to give away those two. Right? I think that's just fair enough to them. Because they paid, they spend the time, they learn. During that 6 weeks, nobody trades. I stopped them from trading so that they can focus on the learning. They've done all of that. They've done the hard work. And then I go give it away to everybody else. It would not be fair to them. So that is what we do in our room. Now, like I said, you can spend the next year following me, looking at my charts, trying to copy it as some traders do. And you may get it. I'm not saying you may not get it. You can learn Elliott waves. And it may take you a year or two. Or you can do it faster by just coming and say, okay, this is what I want to do. Now let's go to what we do and how we do it in the charts. Remember what I said? You look for an impulse, you look for a correction, and you take the next impulse. You look for an impulse, you look for a correction, and if this goes down, you take the next impulse. See? It's pretty simple. You can see this every time in the chart. You can see it on lower time frame. Let's go in the lower time frame, probably a 1 hour. And on this one move going down, you can see the very same thing. You broke out. You got an impulse. You got correction, impulse, correction, impulse, correction, impulse. You got an impulse up, you got a correction. Remember I said if you were looking for a buy, you had a buy set up here. But I wasn't looking for a buy. I'm not trading today. Right? It's pretty simple. And it doesn't matter what time frame you're looking at. It really doesn't matter. You want to look at the 15 minutes? Here is an impulse. Here is a correction. And here's another impulse. I can show you this day in, day out in the charts. Like I said, you have one problem. And the problem is understanding this. That is the problem. Understanding the time factor of that and understanding the pattern of that. Knowing that that is finished and now you can buy. That is the secret. And that is a simple secret. That simple it is. Now let's go look at some charts. I think that gives everybody a very great idea of what we do in our trading room. That is what we do. We look for those impulses, we look for those corrections, and we buy the next impulse. We also look for complete patterns on all time frame. Complete patterns on daily, weekly, monthly, 2 hour, 4 hour, 1 hour, 15 minutes. Once we see a complete pattern in a certain time frame, we just have to make sure it is not the end of the higher time frame. Right? Once you do that, like I said, it's easy. I've been saying this for many times from the first day that I gave my first webinar. You look for an impulse, look for a correction, look for the next impulse. It's that easy. Right? Traders still freak out. Let's go to the Euro Yen and show you how traders really could freak out, right? Let me see if I can bring up the Euro Yen. You want to see trolls come to life? Go and read the chat in here. Then you will see how many trolls come to life, right? All of you will see them in there. Some of them are deleted, but you can still see most of them. Remember what I said at the bottom here? This is going to go up. And while everybody is freaking out, we are not freaking out in our room, trading room. And the reason we are not freaking out is we are analyzing. Remember, I'm doing 2 live webinars daily. I have traders, they're looking at me twice daily and saying, hey, what you said better make sense. We are here looking at you twice daily. You better tell us something that makes sense. They're not going away anywhere. They have lifetime access to be there and to see that what I taught them is working. That's the important thing. You're not going. I'm not giving you some videos and say, go. I don't want to see you back, right? You have access to this for the rest of your life. So you will watch it happen in front of your eyes. We had a buy setup. Yes, we had a buy setup here. Was there a buy setup here? There was a buy setup earlier that some of our traders got in. When they started to pull back, I said, nope, don't sell. This was a news event. Don't sell. It's going to go back up. Sorry, this one. News event, don't sell. It's going to go back up. It did go back up. And I think they were pretty happy. Where are we going to? Let's put it in the daily. Where are we going to? You see what I said daily? You look for an impulse. You look for a correction. And you find another impulse. This was an impulse going down on this time frame. But if you look on the higher time frame, which is what we are doing, what do? You find an impulse, you find a correction, and find another impulse. Amazing stuff. That is how simple it is. Right? It's simple when I tell you, right? Go and ask all the trolls who were freaking out when I said buy at the bottom here. Ask them why they were freaking out. Is there a big move coming? And everybody starts to freak out. What is going on here, right? Because they don't have a clue what to look for in the charts. They don't know that the chart does not move in a straight line. It will not follow my arrow in a straight line. That's not the intention. The intention of the arrow is not to say, hey, it's going to go up in one move. It didn't come down in one move. So it's not going to go up in one move. It's going to go up in impulse, correction, impulse. And you have to learn to read those. Right? That is wave analysis. So everybody freaking out? We are not. Here was the 1 hour setup. I actually updated this chart and I posted this one. If you look at the update, you will see this setup for a buy. We're looking for this stop here. And if it breaks this stop, all of you, if you're not in this trade, let me say this to you now. If you're not in this trade, if you haven't been trading this pair, but it breaks the stop, you want to start trading this pair because we are having a very big move to go up. Let's see if they break. We don't know if this pattern is complete, which means it will tell us it's complete when they break out. Right? If they break out and consolidate, that is a complete pattern to go up. and you want to start to trade the euro yen because there's a huge move, an equivalent of this move to the upside with the same speed going up. You don't want to miss that move going up there. See? That's what we do. That is wave analysis. Now, this is called analysis. It's not a strategy for trading. It's not a guessing game. It's not a coin flipping game. It's not a number game. It's analysis. You learn to analyze things. You learn to make forecasts, and based on those forecasts, you can use a strategy to trade it. Now, I see a lot of traders keep repeating. A lot of traders repeat this. I don't do forecasts. And I said, you're not a trader. If you say to me, you don't do forecasts, I said to you, you are not a trader. Because if you're a trader, that's all you do. Day in, day out, that is all you're doing. You're making forecasts. You're saying to yourself, the reason I'm buying this or that currency is because I think the value of that currency will increase. That's the forecast. The reason I'm selling this or that currency is because I think the value of that currency is going to go down. And that is the forecast. If you don't know it in your trading, something is wrong with you. You should stop trading, go back to learn what trading is, the basics of what is trading, what you're getting yourself involved into, and then come back to realize you're actually making forecasts. Now, you may not have a tool to do that forecast accurately. That's a whole different story. But you are making forecasts. So don't fool yourself and go tell people, hey, look, I just trade patterns. I don't make forecasts. Or I just trade support and resistance. I don't make forecasts. Yes? You don't? Then why are you buying? Why are you buying if you're not forecasting? If you don't think it's going to go up or down, then why are you buying? Before you buy, you have to have a bias. That's it. That's how simple it is. Now, I think enough of what we're doing. Let's go look at some charts. Somebody wanted to see EURUSD and Euro what? Something. Euro. I'm going to show you some different charts. I want you guys to look at these because I think these are amazing charts. Yen. Yep, I think I will start with the yen because the yen is an amazing chart. And we'll start with the yen weekly. The yen weekly is in an uptrend. We've broken that downtrend and we're in an uptrend. I believe this is a consolidation. It is a corrective pattern. And I strongly believe we're in a corrective pattern. And if this corrective pattern is finished, we don't know that it's finished. We're still within it. We need to come back to the top, break out of the pattern to know that it's finished. But if it's finished, this has a very huge move to the upside. Really huge move. So let's go to the 4-hour and look to see what it's doing right now. Right now, this is not a clue that it's going up. Let me just warn you, this is not a clue that it's going up. It is going up somewhat, but this has nothing to do with that. This structure is moving pretty slow. When they make impulsive structures, they go really fast. The clue to tell us it's going to go up is if this structure consolidates. If this structure here stop, consolidates like this, and start to go up here, this would be the key that we are going up. This would be our buying. Remember what I said? You have to have an impulse, you have to have a correction, and you buy the next impulse. You have an impulse, you have a correction, and you sell the next impulse. You have a correction, you sell the next impulse. Right? It's that simple. Right? Did I think this thing was going to go up there? Of course I thought so. I thought we were looking for a buy setup because the whole structure is telling me they should go back to the top here. Oh, sorry. I do believe that this structure will eventually go back. I don't see enough reasons to buy it as yet. The analysis says it could go up. We don't have a strategy to buy it as yet. It's not fitting the strategy that we use. So we will wait until that happens and then we will make the decision to buy or sell. But keep an eye on it because if all the yen pairs are showing us upside, this one would likely do the same. It means we're going to see a yen movement to the upside. And it's very possible. Right? It is very possible that if this breaks, you want to be in this one. You want to be in all the yen pairs. So we looked at euro yen already. Let's look at the pound yen. The pound yen is in the same structure. We are in an up move. We broke that down move. We're in an up move. We broke down. I don't think this is the start of a downside consolidation. I think this is the start of a bigger correction for upside. Now, this may just be a part of the correction. It doesn't have to be the entire correction. It could be a part of it. We don't know whether it's an entire correction or part of the correction as yet. right? We could make a decision to wait until they break this to confirm that bigger upside. Right now, it's just going sideways. So we're going up. Remember what I said you look for? You look for an impulse, you look for a consolidation, and if it breaks, you're looking for your next impulse. Right? This is your next impulse. You're looking for that next impulse. Every time it breaks, you're looking for that next impulse. See? Don't jump into the buy right now, and at least not today. Markets are very, very quiet. You don't want to get into trading today. Right? Let's look at the Aussie yen. Aussie yen is just amazing. Right? I just love this chart. It's easy, easy, easy to forecast. It is pretty easy to forecast. We did this forecast from the top coming down, every bit of it, and it was just amazing how easy and how smooth it works. Right? So what you look for is an impulse, a correction, another impulse, a bigger correction, another impulse, a much bigger correction, and another big impulse, bigger correction, another impulse. We are going up now. That up moves were forecast quite some time back. We started forecast the up move from here, right? We started for all these were forecasts going down, and then we started to forecast the up move from not even from here, but earlier. This was where we started making the forecast for the downside and the upside. See that? This was where the forecast started. Forecast the downside and then the upside already after that, because this is the end of a structure. Remember what I said? You look for the complete structure. Amazing stuff how you can do these forecasts. Right? It's really amazing. Where is this coming up from? Okay. What happened there? Let me go back. Take this off. Yeah. Let me see if I can click in it so you guys could have. Oh, this one is the late one. We should have clicked on that one. See? Down and then up. It's pretty easy to forecast. Right now, if they break this structure, we're looking for one big move to the top here. If they break this structure, and I think they will because this is a complete structure, we're looking for a big move to the top there. So if that happens, it proves what we think. All the yen pairs will go up. CAD yen is another very interesting one. Weekly, we're at the bottom of this weekly pattern. Now this has two options. Because of the way it's structured, it has two options. One, they can go back all the way to the top here. The second one is they can break this structure. So any one of that they do, you have an amazing trade to trade. Let me show you what, if you're trading CAD yen and it breaks this structure, all you have to do is keep buying to the top there. Every time you see a correction, you buy. Every time you see a correction, you buy. If it breaks this, this is one hell of a move to the downside. As a matter of fact, if it does any one out of those two, I'm going to take position trades, which means I'm taking trades and keeping them, only adding more trades to them, and wait until they get to the top. Remember, we don't trade these time frames. We do analysis in these time frames. We look for these big moves coming, right? And then you start trading. When you see a big move like this going up or a big move like that coming down, you can start to focus on catching small pieces of it or selling and staying in it for a long while. Right? You can actually do that. Let's go look at the Swiss yen. Swiss yen, it's looking like it's going to go up right here. You can see the possibility, very much similar to what the euro yen looks like, right? Up move sideways, but it's let me warn you, it's very tough to trade. It is very tough to trade. Two of our traders were in that trade for like weeks and weeks and weeks before they got some pips out of it. Not very much, right? It is really messy when it moves. It looks smooth here, but it's not that smooth when you're trading in a 4 hour and a 1 hour. It is not. So I don't advise traders to do this. We just keep it for analysis purpose to confirm what all the other yen pairs do. We don't normally trade it. New Zealand yen is another one. Pretty nice, but the movements are not so smooth too. It's a little difficult to trade, right? Sorry, this is the CAD yen. Let me get it. The New Zealand yen. Same thing. As you can see here, wonderful structure, right? You got an impulse. You have a correction, you got another impulse, correction, you got another impulse, you got deep correction. With what are the chances we can do this? There's a very high chance this could break out. And if it breaks out to the upside, you have a move like this coming. This is what you have coming. See from this bottom here to the top there. From this bottom here to that top somewhere here, you're going to see a move that goes like this. And you can trade that up pretty easy. Right? If they break to the downside, we're going to look for an equivalent of this move to the downside. See this move here? An equivalent of that move to the downside. So at this point, it is at somewhere where a big move is coming. A really huge move is coming. Right? Once they break this structure, it doesn't matter which direction they break this structure, there is a big move coming in it. So you can focus on this move. Remember, all the yen pairs are showing very similar structure. We get this or we get this. Both are very good structures to trade. These are the messy structures coming down here. See, these are the messy ones. Not the ones going up. Not this one going up. Not this one going up. And if you could have traded this and make money, you can definitely make money in that one. Right? So these are going to happen pretty soon. Remember, I'm on the weekly chart. So probably pretty soon is a couple of weeks from now. Maybe a couple of months from now. But once they start happening, you get a trade that goes up for a whole year, which means you can just stay on that chart and trade this one chart for an entire year and make money. You can't go wrong. Because why? You know the direction it's going. You have a very good idea of the higher time frame direction, the lower time frame direction, and the direction you're trading in. Now, there are going to be a lot of consolidations in it on the lower time frame, right? Impulse, consolidations, impulse. If you master it, you know what you're looking for, right? You know what are the impulse coming in the 240 in the direction you should be trading it. So easy, right? It's not difficult. Let's look at what are the yen pairs. We don't have any other yen pairs here. No, no other yen pairs. So pay attention to those. They have very nice moves coming in them. As a matter of fact, there's a lot of very nice moves. And something to support those big moves in the yen going up is also the dollar index. Right? Dollar index, I posted this, right? We're in the sideways move here. I think every one of you in this room knows if you're in a sideways move, sooner or later you go up. It doesn't matter what strategy you trade. I'll be honest with you. I don't care what strategy you trade. Whether you're fundamentalist, technical trader, or whatever. You know when you see a sideways move, sooner or later, it is going to go back in the direction of the trend. Because this is basic stuff. Right? This is something every trader knows. When you get a sideways move in a direction that's going up, eventually you're going to go up. When you have an up move and you have a sideways move, eventually you're going to go up. Right? I think every single trader knows that. It's not rocket science not to know that. You have an impulse, you got a sideways move, you're going down. You got a sideways move, you're going down. You got a sideways move, you're going down. You get a bigger sideways move, you're still going down. What we had here was a big sideways move. This 1, 2, 3, ABC. If you're Elliott waiver, if you're not Elliott waiver, it's easy to tell. You got a big sideways move, and you're going up. Right? So there is still one more upside in the dollar index to come. Now, first, before that start, we have to finish the downside. Right? And we are still in the downside. We're still within this down move going down, right? Look at it. We're still in the down move going. See that? Now, this here may just be a pullback. This may just be a pullback. You may even get it to this level and you could still go back down. Not until we break this structure can we say they're probably going up now. I think we will come to retest this low to get a perfect sideways move. One down, one up, one down, and then we go up. Now that's basic. It doesn't have to happen that way. When you really study Elliott wave theory and you really study the wave structure we do, you know that it really doesn't happen that simple, right? But remember, we'll be looking at this twice daily, and you guys would be with me to look at it for the entire week, so we can go into the lower time frame. And on the lower time frame, as you can see, we are breaking already, which means when I see this, I'm going to the chart that I posted for a break, sell the breakout. See that? Sell the breakout. The dollar index tells me I should be in this trade going down immediately, right? Sell the breakout. It went up some more? Yes, it did. But it's only now that it's breaking out, right? It's only now. So here's the advantage of wave theory. You see things way before they happen. You just have to have the patience to wait for them to happen. We saw this coming way before it happened. Now, traders may be freaking out. He said sell the breakout and it's going up. It's going up. It kept going up. Yes. So what? Let it go. I didn't say buy the upside. I said wait for the breakout to sell. Because when it breaks out, this is what you get. You get an equivalent of a move like this, an equivalent of a move like that, and there's a likelihood you could get an equivalent of a move like that. Now, you can be wrong. Every now and then you may get one wrong, but you're 90% on the right side of the trade if you follow this. How do you know if it's a real breakout? If it breaks out, it is a real breakout. There's nothing like, I hear traders say this often. Fake breakout, false breakout, head fakes. Those are nonsense. Absolute nonsense. BS. You know what the chart is, guys? Here's what you have to learn if you're a trader. The chart is a collection of statistics, right? What happens in the chart is what happens in the real world. If it prints a dot there, it went to that price. So it's not fake. There's nothing fake in the chart. Whatever you see in the chart is real because that is the price. That is the price right now. If you go to the bank or you go anywhere, that is the price. So it's not fake. It's real. Once you put that concept in your head that something is fake in the chart, you're on the wrong road. You're on the road to losing your account. Anytime you have that concept in your head that something in the chart is head faking or is false or all of that, you're on the road to losing your account. You're looking at the charts wrong. Your view of the chart, your analysis, your understanding of the chart is incorrect. You're going to lose your account. There is nothing fake in this chart. Don't use that terminology. Don't believe people who tell you that nonsense. They don't know what they're saying. Now, the question you probably want to ask, how do I know that this breakout is going to go? That's probably the question you want to ask. Not that whether it's real breakout or not real. How do I know that this breakout is going to go? And like I said, that's what we do. We analyze the chart, and once you have analysis to support what you think you're doing is going to go, you have confidence in what it will do. You have a strategy how to get into that breakout if it goes. Now, what if it doesn't? Sometimes it doesn't go. You're correct. Sometimes this thing breaks. It would not go to the target we're looking for. So I'm looking for a target that is somewhere here. This thing may break out. It may come here, and it may go back up to continue this structure. If that happens, I have a strategy how to get out of that trade. Very nice. Let me show you that strategy. Here is the strategy. When it was at this top here, we make an anticipation. By the way, we knew. If you were in my webinar, I told my traders there's a high risk they're going to break this, but we will still take the trade. There was a very, very high risk, and I can't show you why, but I can tell you why we thought so. Because once we start seeing sharp moves like this, the pattern they're creating is not complete. So there was a high risk they would have broken this trend, and there was a high risk they would have broken the low and then go back up. So if you look at what I post in the chart, you would see I put this is a very high risk chart. There's a high probability they're going to break out, but we will take the trade. You know why we take it? We know how to get a break even out of that trade. Let me show you what I write. This is high risk trading. This particular one is high risk because of the deep pullback we are getting. But if you know how to manage your trade to break even, take the darn trade. We know how to manage it to break even. And I actually post the heads up how to get break even. Keep your stop here. And if they don't take you out, but they come back to your area, take it out for break even. I can guarantee you, if you are trading correctly and your strategy is tested well, there is a 60% chance you're going to get break even on all bad trades like this one. If they don't work, you have a 60% chance to get out for break even. And then you retake the trade based on another strategy. And you always get out of it. Don't make assumptions that it's going to go back up. That is not open for discussion. You get the hell out of that trade and wait for another setup to either buy or to sell. Simple. These are the things I teach my traders. These are the things what we do in our trading room. A lot of people keep asking me, what do you do in the trading room? This is what we do. We are strictly based on rules. Everything we do in that room is based on rules. You have rules and you don't break the rules. You break the rules, you're going to pay the penalty. You will learn the hard way. So I posted this and I said, when it comes, if it doesn't take your stop out, take the break-even trade. We will take the break-even trade every single time, like we would take this trade every single time. Because the chances are, if 50% of these trades go back to the top, which was a very strong probability of that happening, you get a 5-to-1, 6-to-1, 7-to-1 trade. Risk to rewards. That is what is amazing about it when they come back so deep. But there is a high risk is that they're going to break because the structure they're making here now is totally different from, and this is not an impulse, correction, impulse. See that? It is not. And that is why I said this risk has much higher, this trade has much higher risk. No, this rule is for Forex analysis, not only this rule is for chart analysis, not only Forex. Let me show you some other chart analysis you want. Let's take S&P 500, for example. Right? Put it in a weekly. What you're seeing an impulse, see a correction, you see another impulse, you see a deeper correction, and this is what you keep getting: impulse, correction, impulse, right? Correction, impulse, correction, and then you get a big correction. What are the chances this is going to go back up? Because it's correcting, right? Remember what I said? If you look at, let me see, in the monthly, I probably had that. I don't trade these. I'll be honest with you. I don't trade these. But when this started to go down, you see, it's going to consolidate for 6 to 10 months before the next impulse. And you know why I post this? Because a couple traders in TradingView start to freak out. Oh my God, they're big traders in these. They have fundamental analysis and all. Oh my God, this is the fall. The next big crash is coming. And I'm like, what's wrong with these guys? What is all this crazy stuff about the next big crash coming? We're still in the uptrend. There is no crash coming anywhere. Anything that is crashing in your brain or in your imagination. I don't see a crash here. They freak out because they saw that candle. Hey, this is what should freak you out. Those candles, this is a small candle. They had those candles before. They had those movements before in the chart, right? So how many months I said it's going to consolidate? 10 to 6. That was easy calculation. Remember what I said when we started? There are two things you need to know. You need to know what type of structures they can make, and you need to know how long they'll probably take to make those structures. How many months we're in that consolidation now? It's easy to go and check from this post, right? So you've got 1 month, 2 month, 3 month, 4 month, 5 month, 6 month, right? Not counting the ones that go down. So if you count the ones from where it starts, we have 1, 2, 3, 4, 5, 6, 7 months. It could still come back to the downside for the next 2, 3 months and then go back up. Then the impulse start. Now, if it breaks here, good, buy it. If you're trading this, I don't trade this. And if you have a strategy how to buy it. It's chart analysis. It works on every single thing. Want to look at another one? You think you wouldn't see waves here? Think again. It is that easy. Think again. What are the chances this could also break? If you know anything about wave analysis, there's a chance that this could also break. But I don't think it's going to break. I think it's going to go up. There's a different reason for that. We're not going to go into that so deep here, right? You think you don't see waves in them? Think you don't see waves in it? You do. You just have to have the ability to see it. And that is what traders don't know. How to recognize these. And that is what we teach you. That is what we do in our group, right? How to recognize wave patterns. That is what you do in Bitcoin. Bitcoin, everybody freaks out about, right? I only post Bitcoin when people ask me to do it. And people said, can you please post this? You know, this was a correction. Did we say this is going to go up? Let me see in the daily. You probably see that forecast where we're saying a big up move is coming. Here's why at this point I thought a big up move was coming. And you can see it. You have an impulse. You have a 1, 2, 3 correction here. See that? This is 1, this is 2, this is 3 correction. At this point, we are anticipating a move to the upside. Not exactly like this. If you ask me, I would never thought that it's going to move that fast. But a move to the upside was already anticipated. Because we had a complete corrective structure. So once you have a complete corrective structure, your next move is going to go up. See that? Your next move, upside, out, up it goes. Of course, I didn't think it's going to go that fast, that far, right? But it did. Once you understand structure, what are we expecting here? Somebody asked me to pose this. What are you expecting? Very simple. Expecting this to break to the upside. Now, this pattern, this particle pattern could come back here and then go there. That would make an A, a B, and a C wave. And then go back up. If it's not making an ABC, which means it's making a wedge pattern, we don't have proof of that as yet. But if it's making a wedge pattern, it will break out. So all you have to do when you see triangular patterns like this, you have to wait for them to break. Because there's a high risk they could come down and then go back up. It is still within a corrective structure. Now, the way it's behaving, I think you could still see the possibility for a downside about this level and then the upside. So don't just jump in a bias yet. There's a strong probability for this downside to happen, and it could happen as fast as this. One trader wrote me when it was here, should I be buying? And I was like, no. Wait for a correction to happen. Don't buy. Wait for this big correction to happen before you get into any buy. This is what traders do. They freak out when it's going up so fast. And hey, I'm in the buy because if I don't jump in here, I'll miss it. And that's where they jump in. And now they're stuck in this huge sideways movement. Right? Said, should I buy? I was like, no, don't buy. Wait for the correction to finish. It's a huge correction coming. It was easy to tell that correction was going to be huge. All you had to do was look at this one, and you can tell that that one is going to be huge. See? Easy stuff. Viewer 180, if you type your name, that would be much more courteous. We'll know at least who's asking for those charts. We'll come to them. Let's go. So let's look at the euro pair, then let's look at euro. Euro also making a big consolidation here, and I think we're going to have some more upside. I keep saying that. We'll probably retest that top, and then we'll start to look for the downside. It is simple. You have a 1, 2, 3 wave. You have a 1, 2, 3 wave. You're looking for a 1, a 2, and maybe a 3 wave going up. Now, what this structure would look like, we don't know as yet, because there's a chance that in the middle here, you're going to get this structure. 1, 2, 3. 1, 2, 3, and then we go up. So what you have to wait for? Wait to see whether you have a complete structure. We don't have a complete structure here. So this is not giving us any clue as to what it's going to do. But here's what you know. You know we're between these two, and we're going to be stuck there for a long time. Let's look at Euro Oz and Euro Cat for one impatient, very interesting trader waiting. Been asking for it from the start, so let's do it. We're in this structure. This is a buy setup. I think I actually posted this. This is easy to read, guys. I mean, come on. You don't want me to give you easier things than this. Here is a correction. Here is a correction. Here is a correction. Simple. It can't be easier than that. This one broke to the upside. This one broke to the upside. What are the chances this one will break to the upside? It's that simple. It's very high probability of that happening. So all you have to do is wait for a good breakout. You got a breakout, you're getting this breakout here. You're getting a smaller pattern here. You can wait for that breakout. What you need to be careful of, remember what I said, structures are not that easy, right? You don't know if this pattern is complete. And if you ask me, I'm going to tell you, I'm not sure it's complete as yet. Because looking at that structure, there is more scope for it to develop. Now, if you ask me if I would buy that, I would say yes. And the reason I would buy it is that I know how to manage my way out of it if it doesn't go well. Which means if the structure is not completed, I know what to look for in the charts to tell you whether it's completed or whether it's not. Right now, it is not a very complete structure because this C wave never broke the bottom. It barely tagged the bottom. We got a 1, 2. There's a probability we come for a 3 here, and then we go down back for a bigger one, and then we go up. That probability exists. So if I'm going to buy this here, once it comes here and I see what I'm looking for in the chart telling me it's not over, I will move my stop to break even and let it take me out for break even, come back here, and now I'm a buyer to go up. So once you know structure, you don't. It's not that easy, right? You have to know different time frames of structure. Like I said, I train some traders who have 5, 10 years experience for 6 weeks, and they still take some time to grab the concept. But once you grab that concept, you know how to manage your ways into trade. Is this a buy? Yes, it's a buy setup. Should you buy it? Definitely, if you know what you're doing. Should I buy it? I would definitely buy it. I have everything in that chart that tells me it's a buy setup. And if the pattern is going to totally break out, tells us it's totally complete, that's it. You're in a very good trade. But looking at it now, I can tell you there is a chance that it's not completed as yet. Right? There's a very high chance that that doesn't happen as yet. Now, if I'm in the trade and if I'm caught upside down on him, I would not freak out. Right? I would not freak out because here's the thing. I know how to read the charts. I know where this thing is going to pull back. Remember, it never goes in a straight line. So let me just, for example, show you. If I buy this here and I put my stop here, and I see that this thing does this, and for some reason I wasn't there when I should have moved it to break even, and it starts coming back at me. Two things, option, I'll allow it to take me out here, or I'll manage my way out of this chart when it starts doing this. Because even if it's coming down, it will not come down in one straight line. Now, you don't know how to do that if you don't know how to do chart analysis. That's a good question, viewer 398. That's not how I would like to call you, but that's the name you give us. You don't want to type your name, right? It's not so much only about time factor. There isn't a fixed time factor. I see some traders trying to do that, like time in mode or time in whatever they're calling that. There is no fixed time factor. The time factor would depend on the type of patterns you're looking at, right? The time factor would depend on the type of patterns you're looking. Is it making a wedge? Is it just making a flat? Is it making a zigzag? Depends on these patterns. That will give you. So it's a completion of a pattern in a certain time. That is what is important. Not just the time, but is that time enough for a completion of a pattern? So it's the combination of both. Let me show you a very good example in this EURUSD. And everybody was freaking out too about it. On this one, on the 1 hour, let me see if I can get it. No, daily. I'll put it in daily so that we can go into that area that I'm looking at. I think it was somewhere in here. Oh, yep. No. Right in this area when this was going up, right? When this was going up here. Right? Well, first we forecast the big move to come. That's the first thing we did. We did the analysis. We said, okay, this chart is going to go up for a big move. I think we can all say we know what happened. Right? Now, how do you trade it? And on the 4 hour, let me see if I can bring me back, if I can get myself back to the 4 hour in that level without much problem. Yep. On the 4 hour, there was a call to buy. And you know what happened, right? Traders, it went up a little and came back, and everybody freaked out. As usual, the community starts to freak out when it came back. It came here, and then it starts to come back, and everybody freaked out. And we were like, why are you guys freaking out? That's basic stuff. It's not over. It went up back. Actually, we bought this again here. It came back again. More freaking out. And then I had to post an update to show that this pattern, if I can find the update in here, I don't think I can find it, but it should be there. Saying that it's just a complex corrective structure. Once you understand it, you don't have to freak out. It's still going up. Right? Once you understand it, don't worry, guys. It's still going to go up. Don't freak out. It's still going to go up. See? So we found a direction on a higher time frame, and then we traded in the lower time frame going up. No need to freak out. Once you understand structure, you don't freak out. It's for the rest of the community to freak out who don't understand it. Right? Nothing. Now, we know this was going to go up. We knew this was going to. The only piece we didn't get was this very sharp piece. Because at that point, we were looking for a deeper correction to get it, and it just took off like a rocket, right? Faster than we were looking for this pullback to come to this level. This is what we were looking for. come back here, and then take that trade up. We never got that, and it just took off. So we didn't get an entry into it. Right? So that's what we do here. That's the thing you have to learn. If you learn this, what is the chance of this coming back? Very high chance. Now, do you know to trade it? That's the whole difference. There's a separate thing of reading the charts, and there's a separation of trading, because trading needs a strategy. Is it possible? Okay, questions are coming in. I was hoping you guys keep the questions in, but let's go through some of the questions very far. Is time factor? I've answered that one. How to check the breakout to confirm that we entered the trade? You will have to have a strategy to do that you have tested yourself. And better to enter breakout or after the correction. You will have to have a strategy to test that on your own and trade a strategy that you have tested and you know how it works. Whether a chart is getting truncated, I know nothing about that. I have no idea. I've never seen truncation. I don't use truncation in Elliott wave. I think truncation was something that was created because of not understanding fully what that part of the chart is doing. Why correction is the end of every 1 hour? I have no idea what you're talking about. I don't know that is so. If you have done the studies and you know that is so, you will have to figure out why. I don't know. I've never seen that. I can't say that I can't support it or I can't disagree with it because I've never done that study that correction is at the end of every hour. I don't think that is so big, but I can't doubt it because I haven't done any work on it. Why correction in the end of every hour for every candle? I've looked at that question already. Don't repose the question 2 times because now you have to read it. In why most of your buy or sells in the breakout setups comes when market is already in overbought or oversold. I have no idea. I don't even look at overbought and oversold. I don't use overbought oversold because I don't believe any currency is ever overbought or oversold. Hey, here's a question. How do you know that pound is overbought? Or what does overbought and the dollar on the pound means? You're living in England. You have pounds in your bank account. You have pounds in. What do you mean that your pound is overbought or oversold? Nothing. It doesn't mean anything. Being overbought or oversold is just a language that is used to create emotions in traders. What do you mean by overbought by who? Or oversold by who? By which bank? You go to any bank, they will always have pound on their account if they're trading pound. Whether you want to buy that pound for them or sell pound to them, they will accept your trade. They can't tell you, hey, sorry, we're not buying. This thing is overbought. Or we're not selling, it's oversold. No, they don't have that. That's nonsense. You can go with £1 million into a bank and say, hey, I want to sell you this pound. They say, no, it's oversold. We're not going to do that. No, there's nothing like that. They will not tell you that. They will accept your trade for a price. And that's what you need to do. You're trading currencies, guys. You don't get into too many fancy things. It's very simple. It's trading currencies. Don't get into all kind of fancy language that is crazy. You try to walk in a bank anytime and say, hey, I want to buy, and let them tell you it's oversold, we are not selling to you, or it's overbought, we are not buying from you. It's not going to happen. It doesn't happen. You place an order, if you think it's overbought, you place an order to buy from your broker. See if they don't accept your order. They will accept it. It doesn't matter what trade you click, the bank is going to take every bit of it. Because the banks don't have that terminology that is overbought or oversold. They buy and sell every single day. They're buying and they're selling. For you to have a buyer, for you to have a market, you have to have a buyer and you have to have a seller. So it can't be overbought or oversold. It's always a buyer and a seller in the market. Always. There's always going to be a buyer and a seller. That is what creates the market. If you don't have a buyer, you don't have a market. If you have a car to sell and nobody wants to buy it, you don't have a market. You have a market when somebody comes and said, what price are you selling for? I'm going to pay this price. If you agreed on the price, you have a market. And that's the definition of what the market is. Two traders agreed on the price, but they disagreed on the value. You don't have value for the car because you don't need the car. The guy who needs the car values the car more than you. That is why he's buying it. He thinks he needs the car very much. The value for a car to him is more than the money he has. Whereas the value for the money for you is much more than the car. The car is just standing there doing nothing, and you need money. So your value is for money, his value is for the car. So you have different values, but you have the only thing you have in common is a price, the agreement of a certain price. And then you have a market. That's it. And that is what it is in currencies. It can't be overbought or oversold. Never can be overbought or oversold. By whom? Who is overbuying? Then somebody is overselling. If somebody is overbuying, there's somebody overselling to him. That's easy. You guys listen to a lot of these nonsense that comes from the broker or whoever they're coming from, and you create emotions. You create emotions in your brain that is preventing you from actually looking at the charts and reading the charts, right? Like false breakouts, head fakes. What is all this nonsense? How does that help you to trade? It just disturbs you. It just blocks you from making good trades. So it's in a trend going up. Let me just show you a trend. I just showed you the yen. I don't know. So let's go back at the yen. So let's look at this in the daily. Come back to where we were. So yen is in an uptrend in the weekly. Let's go in the weekly. It's in an uptrend. So at this point, they're telling you, oh, this thing is overbought. What do? Do you buy this? No, you don't, because you have an out. This thing is overbought. I'm not in it. No, I'm not going to buy this thing. It's overbought. Crazy stuff. You have an impulse, you have a correction, and you're going to get the next impulse. Buy the darn thing. Stop looking at what is overbought or oversold. Just buy it. If this trend continues to go up, it's going to go up and up and up. And nothing like overbought is going to be in it. Right? There's nothing like that. It simply doesn't exist. Stop using that indicator. Throw it in the wastebasket. Simple. Just understand. The basic things traders should... Here's what most of you should do first. You should understand what trading is. Stop trading until you understand what trading is. Trading is simple. It's buying and selling. Somebody is buying, somebody is selling. It doesn't matter what it is. It's currency, it's cars, it's apples, it's what. You're trading something for something. And if you don't have a buyer, there will not be a sell. If you don't have a seller, there will not be a buy. You have to have two parties. One person accepting the other side of the trade. Whether it's the bank accepting the other side of the trade, whether it's another trader accepting, it doesn't matter to you. A transaction has two sides in it, a buy and a sell. That's simple. Don't confuse yourself. Don't let other people lead you into believing nonsense. Here's the thing. When you hear something, question it. Don't take what I tell you for granted. Question what I say. Everything you hear me say, question it. Go back into it. Do some details. Do some research. Find out whether that thing makes sense to you before you use it. Right? People just hear things and they grab into that concept and they run away with it. Oh, it's overbought. It's overbought. And I'm like, what is he talking about? Does he really knows what he's talking about? No, they don't. They don't have a clue what they're talking about. They just say it because they believe, oh, well, it sounds nice. My RSI is showing overbought, so I wouldn't be buying anymore. I'm looking for a sell setup. You tell that to the bank who is still buying. Do I use bank order levels? I have no clue where the bank order levels are, viewer 276. And anybody who tells you they know where it is fooling you. Honestly, I'm just a trader sitting behind my computer. I have no idea where is their bank order. Anybody who tells you they know anything what the bank is doing in terms of where the bank is buying or selling, they're lying to you. You need to ask them which bank they're talking about and who's the connection in that bank that they have. Because every bank in the world has their own reason for buying and selling, and they may be doing that at any point in the chart. They don't have a chart. They will be doing that at any point in the day. So let's say you take a bank in Russia that needs dollar or needs, I don't know, euro for some reason because one of their clients would like to import something from Europe and he needs 10 million euro. He's likely going to put an order out to buy that 10 million euro, right? Regardless of where that level is for him, because his client needs the money to pay the other side of the trade transaction, right? And that has not, that has very little to do with where bank levels are. There's nothing like bank levels in that. There's where there's an order to buy or there's an order to sell. That's it. We don't know where they are. They're probably everywhere. At any point of the chart, at any point of the cost, or at any time of the day, there's a transaction probably happening. So anyone who tells you that he knows that, just smile at him and say, thank you, I don't need it. You keep that level for yourself. Oil, UK oil. Somebody wants UK oil. Okay, so here's what we do. Let's look at some more charts. And I think I can take a few more questions and we'll call it. Let's look at oil since somebody asked for that. UK oil. I had US oil. I don't know if I have UK oil on. Oh, I have it. Yes, it's there. I don't look at this though, but I looked at the US oil a lot. Let's see what it's doing. Pretty simple, right? See that? I probably did this, I don't know, way back. Because I really can't remember looking at this chart. So we're probably looking at a possibility of a breaking of a trend for upside. So what you're going to wait for, go to your lower level. And remember what you're looking for? You're looking for your corrective structure, which is in the making right now. So it's right now making a corrective structure. You had one impulse up. You had a corrective structure down. You got another impulse up. You're making your corrective structure here. If you get a very nice corrective structure, you could look for a breakout. Simple. Wait and see whether this structure coming down is going to be corrective or whether they're going to break the trend line. So I don't even have the chart, and that will take some time. So we'll probably leave that for tomorrow. I'll add the chart for you tomorrow and do it. Okay, let's go some other questions. Any other questions rather than just a chart? Any questions you guys have on any other thing, or not just the chart? Let's go. We can take some more questions. What I will do tomorrow is we're going to be looking for trades, directly for trades. So tomorrow when we open the charts, we'll be going detailedly on the charts that we trade and look for trade setups. So for the rest of the week, that is what we're going to do. I just want to give you guys an introduction as to what we do today, basically. Right? Can I show a 5-wave pattern? There are many 5-wave patterns, depending on what you're looking for. How will we know on chart that this is now wave 1 and wave 2? You have to learn that. That cannot be done in 1 or 2 webinars. You have to learn that. That's a whole learning process that we do. And wave C is now going to end. How can you know all these in chart? If you learn it, it's the same question. If you learn it, you will know. How do you sign up for the course? I wanted to do that at the very, very end of the 5 days webinar. But if you're in a hurry, just Skype me. This is my Skype. I wouldn't be discussing it much. Skype me. It's MANGAL 457 and just ask me in the Skype. Add me to Skype and ask me for the info and I'll send it to you. I don't want to discuss that right now. I want to remind everybody to please sign up for the Trading View charts. Support those guys. This whole week I'll be calling to support them. Sign up for the charts. Let's give them the support. They need that cash to make this thing going well, right? To keep it going well. We love the platform. We love what they're doing. What are your criteria for each wave? You have to learn the whole. If we go into discussing the wave theory and the wave analysis, that will take quite a lot of time. It's a huge learning process. How do you use the MACD? That's not something we can discuss in here, I think. Money management, I can do a class on money management for you. If there is something you can share for people who are not in your course, please share it. Money management, yep, I can do a money management course tomorrow. So here's what we're going to do. Tomorrow, all of you come. The first half of the webinar, we're immediately going to start looking at charts for trade setups. And the second half, I'll probably less than the second half, I'll talk about money management. If that is great for all of you. Please come again tomorrow. Let me see you. You can invite your friends. It's free. I think that would be interesting in money management, how I looked at money management, right? How do you label? My traders take 6 months. Somebody's asking, how does he label that? My traders take 6 weeks course and then a couple of months before they could label correctly. And you think I can teach you that in one webinar here? And we're talking about training sessions, really training sessions, right? Where you get to show your charts and show me how you're doing the labeling and I correct you. We can never do that here. EURUSD. We didn't look at EURUSD, right? Let's look at EURUSD very fast, and I think that's the last thing we'll do, and then we'll go. So let's look at EURUSD. There's EURUSD, by the way. Yep, I think there's one more up move. We're actually making corrections. Did we break out of that correction? No, I think we're still making some kind of a correction. Actually, we broke out. If you're in the trade already, you actually should just get it to break even. What they're doing is making lower level corrections here. You can see that. And then we should anticipate more move up. It looks like lower level consolidation. Let's see it's in a 1 hour. Yep, I would say they're actually making, if you're not in the trade, you can wait for the breakout of this structure here. Let it complete what it's doing and then break out. If you're already in the trade, all you have to do is get it to break even and don't worry. What do I think of gold? Gold is in consolidation. We'll look at it tomorrow. How much time it takes to make one complete Elliott wave? I think you don't have a clue what Elliott wave is if you ask that question. There's nothing like one complete Elliott wave. There simply is nothing like that. The entire chart, Elliott wave is an analytical tool you use to analyze the chart. There's nothing like one complete Elliott wave. So the question tells me you have very little idea of what Elliott wave is. I'm not criticizing you as a person. I'm just telling you that your idea of Elliott wave is not very clear. There's a good, there's a book on Elliott wave. It's called Elliott Wave Principles. That's the one I read. It's free. If you go to elliottwave.com, you can get it for free. You register and you'll have it for free. Use MACD for entries? No. MACD has nothing to do with entries. We use MACD to do a lot of other things, but not entries. Okay, if you're 398, repeat the question about Elliott wave. No, that I think you have to go back, read the book, and then have a better understanding of what it is. I already gave my Skype for those who want to sign into the course. Thank you. Hello. We'll do Pang New Zealand tomorrow. Here's what I'm going to do tomorrow. Let me repeat it for everybody. Tomorrow we come. Today we didn't get. I wanted you guys to have a better idea of what we do today. I think it's much more. It's always much more beneficial if you get some idea of what we do rather than just the trade. So tomorrow is regular trading. Today is not regular trade. Tomorrow is regular trading. I'll open the room. And immediately we start looking at all the charts. We're going to go through every single one of the charts for about 30-40 minutes, and then I'll take questions and I'll talk about for 10-15 minutes. I'll talk about. We can talk about money management. Somebody asked about that, right? Elliott wave work and all time frame. It's not about where Elliott wave work. That's not what Elliott wave is about. I think you're having a wrong concept of Elliott wave, and you keep asking more questions, and it's proving to me you have no idea. Elliott wave is a theory. A theory that the chart moves in wave structure. So you can use that theory to analyze the charts, an analytical tool. If you use it as a tool, how to count the waves, it's a way of tool. So there's nothing like one Elliott wave in the chart, or how does one Elliott wave work on one time frame. That's a misconcept, right? That's not what Elliott wave is about. I don't know if I'm getting the answer over clear to you. It's a theory. It's nothing else. It's but a theory, and the theory tells you how you can analyze the chart using the wave counts that they have. That's what it is. And it doesn't matter what time frame you're using. You can do it on any time frame. You can do it on any charts, right? The idea is if you master the way it works, the way you count, if you can master that analytical way of reading the charts, it works in your favor and it gives you a 90% advantage. You're likely going to be better off understanding it than not understanding it if you're a trader. So if you're a trader and you're just trading, I don't know, support and resistance, but you have a very good idea of Elliott wave, that will increase your chance of being a successful trader rather than not having any idea of Elliott wave and continue to trade support and resistance. if you're trading, and worse yet, if you're trading advanced pattern, then you should know Elliott wave, because these patterns that traders use, all these patterns, they're based on the concept of Elliott wave, in that you're going to have an impulse and you're going to have a correction. And if you don't know Elliott wave, you're going to use those wave patterns wrong. So you must know wave theory if you're using Elliott wave, if you're using advanced patterns to trade. You just must know it. There is no option to that. Right? Now, if you're using any other thing, I don't know, what other people use moving averages to trade. If you're using moving averages, knowing or understanding wave patterns will not hurt your trading. It's just going to make it much better. Right? It's just going to make your trading much better. Now, here's the good thing about it. Once you understand the wave concept and the wave theory, you don't need all the other stuff. You simply don't need them anymore, because you understand the charts much better. So, okay, guys, I think we can call it a day for that. I don't have a website. Sorry. Probably consider making one, because everybody keeps asking me for that. Right? So let me thank everybody for coming. Remind you once again, please subscribe for the charts. This is a call from me personally. It has nothing to do with the admins from Elliott Wave. They didn't ask me to do this, and I'm not sure whether they're happy I'm doing it, right? But on myself, I want to say thank you to them for keeping me here for 1 year, and you guys should subscribe. If you can afford it, please subscribe. See all of you tomorrow, 9 a.m. New York. Thank you. Bye-bye. Please share the link. Have a wonderful day, everybody. Bye-bye.